virtual asset service providers.
The virtual asset service provider.
Virtual asset service providers bill.
Virtual asset service providers bill.
Virtual asset service providers and
the virtual asset service providers bill.
The way crypto works in Kenya changed forever in 2025. Not because of Bitcoin, not because of Ethereum, but because of one law. On November 4th of 2025, the Virtual Asset Service Providers Bill was signed into law by President William Ruto. And with that, a new era of crypto regulation began. For the first time in Kenya's history, crypto had rules. Rules that affected the traders, builders, investors, and everyday users. So, in this video, I'll break down what this act really means and how it affects you as a Kenyan. My name is Morgan and I tell stories in crypto and blockchain. Welcome to the Red Review.
Okay.
Over the past few years, crypto adoption in Kenya has really been growing rapidly, and across Africa, we've seen the same trend. Kenya, being the Silicon Savannah, could not be left behind. In fact, Kenya became one of the biggest crypto markets on the continent. According to Chainalysis, in 2025 alone, Kenyans moved over $3.3 billion in stablecoins. And more than 10.7% of the population owned crypto. That's millions of people and billions of shillings. As the market grew in Kenya, big players started coming in. International exchanges, local companies, everyone wanted a piece of the market. Regulation was inevitable, and that's how the VASP Act was born. Now that we understand the background, let's address the elephant in the room. What is a virtual asset and what is a VASP? A virtual asset is a digital representation of value that can be stored, traded, or transferred electronically and used for payment or investment purposes. A virtual asset service provider, or a VASP, is an entity or a business that facilitates activities that involve virtual assets. VASPs include cryptocurrency exchanges, wallet providers, and other entities offering services like trading, transferring, or safekeeping of digital assets. So, what does the law actually do? Simply put, it creates rules for any businesses dealing with crypto in Kenya. Under this law, any company, local or foreign, that offers crypto services must be licensed. These companies must follow strict regulations set by the government. The two main regulators are the Central Bank of Kenya and the Capital Markets Authority. The Central Bank of Kenya will oversee payment-related services, wallet providers, payment providers, and stablecoin issuance, while the Capital Markets Authority will handle exchanges, trading platforms, tokenization, brokers, and investment advisors. And once you fall under any of these categories that I've mentioned, you trigger full compliance obligations. Also, the Cabinet Secretary for National Treasury also has the power to designate additional regulations in the future, meaning the regulatory scope will expand over time. You might be asking when this law takes effect. The Act includes a 1-year moratorium. This simply means that companies have been given 1 year to prepare and to comply. This period ends on the 4th of November of 2026. Right now, the Act is going through public participation and stakeholders can engage through bodies like the VASP Chamber. You as a crypto user can also be involved in the public participation and are free to contribute. More details, including licensing costs, will be released in the coming months. Now, let's talk about licensing. Because under the VASP Act, not every company can just wake up and start offering crypto services in Kenya. To get a license, companies must meet strict requirements, including strong capital reserves, proper cybersecurity systems, clear anti-money laundering controls, fit and proper directors, and solid consumer protection measures. In simple terms, you must prove that you are serious, you are secure, and you are trustworthy. Under this law, companies are required to be financially responsible. They must maintain enough capital, have insurance, and most importantly, separate their own money from the customer's money. Your funds cannot be mixed with company funds. They must also submit financial statements and be regularly inspected by regulators. These rules exist because of what happened in the past globally. Cases like FTX by, this guy, where customer funds were misused and billions of dollars were lost. Ordinary users suffered, lives were affected, and so the goal of this law is simple: to make sure what happened there does not happen again, to protect your money, to protect your data, and to protect your trust. By tightening these rules, the VASP Act is trying to build a safer crypto ecosystem in Kenya, an ecosystem where innovation can grow without putting the users at risk. That's you and me. Other countries are already preparing their own VASPs and have already prepared their own. Countries like South Africa and Nigeria already have their VASP laws, and countries like Ghana, Rwanda, and Ethiopia are coming up with their laws. Across the continent, governments are getting ready, and this is not just a trend in Africa. Even in the United States, crypto is being regulated. Over the past few years, several bills have been introduced to regulate digital assets in the US. One of the most talked about bill being the Clarity Bill. Its goal is to clearly define who regulates crypto, how companies should register, and what compliance looks like. But like many other proposals, it has faced resistance, lobbying, and political disagreements. And that shows you something important. Even the biggest economy in the world is trying to figure this out. So, the Virtual Asset Chamber and Web3 clubs are launching a new cohort to help founders understand the VASP Act, licensing, compliance, and how to build legally in Kenya and across Africa. If you're building in Web3, crypto, or digital assets, now is the time for you to understand the law. The link to register for these masterclasses is in the description. If you're in this space, you cannot afford to ignore this. Crypto is reinventing the financial system of the future. If you found this breakdown helpful, drop a comment and let me know what you think about Kenya regulating crypto. If you're excited or concerned or somewhere in between. So thank you for watching. See you on the next one. Also hit the like button, and if you want more updates on blockchain, crypto, and Web3 in Kenya, subscribe. That has been me, Morgan Miner, from The Red Review. Thank you for watching.